You know, analyst reports can be a real headache. They're just packed with numbers, jargon, but if you look closely, there's always a story hidden inside. So today we're going to crack open a Goldman Sachs report on a company called Lapu Gold. We're going to find that story and figure out what's making it shine so brightly for investors. Let's get into it. Okay, let's just jump right in with the number that made everyone's head turn. 51.7%. That is the potential upside that analysts at Goldman Sachs see for Lenopu Gold stock. I mean, that is a huge number. And it makes you wonder, right? Why are they so confident? And here it is, plain and simple, a buy rating. So the big question is, how on earth did they get to that conclusion? Let's work our way backward and see what evidence they found. All right, first things first, let's look at the company's performance. You can think of this as Lapu Gold's report card for the first half of 2025. And spoiler alert, they absolutely aced it. So check this out. Total sales. For the first half of the year, they saw year-over-year growth of 251%. That's just staggering. To put it simply, for every dollar they made last year, they're making more than 3.5 this year. But you know, huge sales are one thing. What about profit? Well, their net profit grew even faster, at an incredible 286%. And that tells us something really important. Lapu isn't just getting bigger, it's getting smarter. It's getting way more efficient at turning those sales into actual cash. Okay, so whenever you see a retailer growing this fast, you've got to ask a key question. Is this just because they're opening a ton of new stores, or is their core business actually getting stronger? Well, analysts have a special metric for that. And Lapu's number here is, honestly, it's a jaw-dropper, 200.8%. What we're looking at is something called same-store sales growth. Basically, it ignores all the shiny new stores and just looks at the performance of the locations that were already open last year. And getting a number this high, it means their existing stores are absolutely on fire. It's one of the best signs you can see of a really healthy, sustainable business. So yeah, the headline numbers are incredible. Growth everywhere you look. But, numbers on a page don't really tell you the whole story. The real question is, how? How did they manage to pull this off? Well, the report boils it all down to two main ingredients. First, they have this incredibly loyal, high-end customer base. And second, their operations are just impressively efficient. Let's break those two down. All right, first up, the customers. Their loyalty program is just exploding. I mean, look at this. They added 130,000 new members in just 6 months. That's not just random growth. That's a fast-growing army of their most dedicated repeat customers. And it's not just about how many customers they have, it's who these customers are. Get this, a whopping 77.3% of them also shop at top-tier luxury brands like Hermès and Louis Vuitton. That tells you everything, doesn't it? Lapu is attracting exactly the right kind of person, someone who appreciates quality and has the money to pay for it. Okay, now for that second piece of the puzzle, efficiency. This chart here is super interesting. It shows how much the company is spending on the basics, selling and admin costs, as a percentage of their revenue. And the report points out that these costs actually went down compared to last year. Think about that. As their sales exploded, the cost of running the business actually got smaller in comparison. That means more of every single dollar they make is dropping right to the bottom line. And just when you think it couldn't get any better, there was this little surprise bonus for investors. The company was feeling so good about its cash flow that it announced its first ever mid-year dividend. Nobody was really expecting that. It's just a massive vote of confidence from the management team about where things are headed. Okay, but a good analyst's job isn't just to cheerlead. They have to be skeptical. They have to ask what could go wrong. So even in a report this positive, they're always looking for potential risks. So with that in mind, is everything completely perfect here? Well, no, of course not. If you dig into the data, the analysts found one little number that was heading in the wrong direction, and it raised a really important question. And here it is. So, while their overall profit was amazing because of that efficiency we talked about, the profit they made on each individual item, what's called the gross margin, actually dipped a bit. Now, what could that mean? Well, it might suggest that to get those crazy sales numbers, maybe they had to run some promotions or maybe their costs went up. It's a tiny yellow flag that shows that all that volume might be coming at a small price. So that little margin dip, that's question number 1 on the list Goldman Sachs wants to ask the management team. But they've got more. They're already thinking ahead. How are you going to optimize your stores? Are you thinking about expanding overseas? Can you launch even more expensive products? And maybe most importantly, how are you going to take care of those VIP customers? This list is like a cheat sheet for how professional analysts think about the future.
Okay, so we have these amazing results and a few lingering questions. What does the future look like? Well, the report doesn't just look in the rearview mirror. It also points to a few things on the horizon that could keep this momentum going.
The analysts are watching 3 things in particular. First, a price hike scheduled for August 25th. That should directly help that gross margin problem we just saw. Second, they're getting faster at selling their inventory, which is a great sign of strong demand. And third, they're starting to expand into Singapore, and the early signs look really good. That could be a whole new chapter for them. And that really brings us full circle. But the whole point of breaking down a report like this isn't just to give you the answers. It's to help you start asking smarter questions yourself. An analyst report is just a starting point, right? It's the beginning of the conversation, not the end. So now I'll turn it back to you. After seeing all this, the good, the bad, the questions, if you had a seat at the table, what's the very first question you would ask?